cash flow, cost structure, reporting obligations, and long-term sustainability. So our role here in Lotus Bank is to remove every ambiguity and replace it with clarity for everyone. So at Lotus Bank, we believe SMEs should not navigate regulatory changes alone, because compliance comes with structure, and structure begins with proper business registration and tax compliance. That is why beyond banking, we want to support SMEs with the following. CSE business registration services is something that we offer at Lotus Bank to ensure businesses are formally structured and tax ready from inception. We also assist with post-incorporation filings and compliance support. We also offer non-financial advisory services to guide strategic growth and to scale up your business. We also offer financing for SMEs. It could be working capital financing, asset financing, financing for schools, for hospitals. If you are a distributor, we also have something for you. If you're in the agri sector, we have something for you. If you're a women entrepreneur, Lotus Bank is here to serve you. Name it, whatever sector you are, we have something that can be a financial solution for you. And we also have digital banking solutions such as POS, corporate internet banking for SMEs, so that they can carry out transactions seamlessly. Without wasting much of our time, I would like to introduce us to today's facilitators who will guide us through today's section. We are privileged to have in our midst a distinguished expert who brings into deep experience international tax, governance, and SME advisory. Our facilitator today is a partner at PwC Nigeria, and she leads the International Tax Service practice. She has advised businesses across sub-Saharan Africa and previously worked with PwC New York on the international tax structuring. She also led the team which published the maiden edition of PwC's survey on MSMEs, and has a strong passion to ensure SMEs are thriving and that they are the driving engine of Nigeria's economy. Everyone, please join me in welcoming Mrs. Esiri Agbeyi. Thank you very much, Ms. Esiri Agbeyi, for joining us. We are absolutely delighted to have you. And we are also excited because we know SMEs today are going to get a lot of insights and clarity. Given the change that is happening in the tax landscape, we are so honored to have you. Mrs. Esiri Agbeyi, the floor is yours now. Thank you.
Thank you very much, family. And it's a pleasure to be here. Good day, everyone. I'm hoping that I'm sharing my screens just right, but please.
Hi, Mrs. Esiri. We are unable to hear you.
Okay, I've unmuted myself and I'm already speaking. Can you hear me now?
Yes, we can. Thank you. Please go ahead.
Okay. So I'm hoping that my screen is showing just right, but let me know if it isn't so that I can amend that, yeah?
Yes,
all right, so okay, good, fantastic. So good day, everyone. It's a pleasure to be here, and thank you, Lotus Bank, for doing this. One of the things that we sought out to do as a firm as well is to make sure that we were very clear in pushing out the information regarding the changes in the tax laws, because it's important that everybody knows about what's going on. So it's good, it's fantastic that we have other organizations as well that are part of this process, and helping businesses also take advantage of the opportunities that it presents, but also understand clearly what the challenges are. So today, I'm going to take you guys through what the tax laws are, what the tax reform is all about, and what every businessman should know, including SMEs especially. So what we'll do is we'll just cover an overview of the new tax laws. We'll talk about it from a business standpoint, and then we'll talk about it from the individual perspective. Why? Because the tax regime is different for both. It even cascades down into whether you're a limited liability company or whether you're just a registered business name, which most of us might be, especially in the SME cluster. But it's also possible that you have a limited liability company as well, and the rules are different. And then we'll close with a roadmap, and then I'd like to take questions and answers. I've already started seeing some questions in the Q&A box, but please put in more questions, and maybe I'll just touch on some of those that I've seen so far as I speak. For instance, somebody is asking about a tax ID versus a tax identification number. The new reform is saying that there's now going to be a tax ID, but there's a phasing process for that. So we would be transiting from just having TIN to tax IDs. And in fact, there is now a website that has been set up for people to be able to generate their tax ID. So tax ID is the way to go, and that's what's prescribed under the new reform. Now, these reforms were signed into law last year, signed by the President on the 26th of June 2025, and they become effective from 1st January 2026. Some parts of the law were effective immediately last year, especially those that had to do with administration and the renaming of the tax authorities. So, for instance, the Federal Inland Revenue Service is no longer FIRS anymore. It is now the Nigeria Revenue Service. So those changes were automatic. Some other changes included the e-invoicing, which took effect from last year, but there is a phasing process as well, and we'll get to the point where I then speak to you about the timelines concerning that. But what were the key objectives for this reform? Because Nigeria has fast not grown or increased its tax GDP ratio from the 10% that it currently has to about 20%, which is the average in Africa and in other jurisdictions globally, it was important that we looked inwards to start to mobilize revenue differently. Also, if you know and are following the news, you'd find that we do a lot of borrowing to just take charge of the capital expenditure and even recurrent expenditure that we would ordinarily budget for in any given year. Doing that on a debt basis means that we must actively generate revenue to be able to repay the interest. Otherwise, as a businessman, you would know that you would be running annually on a deficit, and at some point you may be bankrupt. So it was important that we started to look inwards, and this is why the tax reform has happened. What were the critical areas that needed to change? One is, how do we consolidate agencies, consolidate all of the laws, ensure that there are no gaps in between? That was one. How do we harmonize as well? Harmonizing also the instruments that are used to implement the tax laws, and to be sure that when we're implementing, one agency is not speaking something else and another agency speaking another. And then also, finally, how do we enhance the rights of taxpayers? So there are changes now that ensure that taxpayers' rights are better protected, similar to what we have internationally. And one of those is the creation of something we call the tax ombuds. The tax ombuds is an additional agency that will help taxpayers with educating them on their rights, but also advocating for their interests. So if there was any part of the law that was not in your favor, you could go to the tax ombuds and they could help you with the negotiations or with iterating those points properly to the authorities that be. Okay. What are the tax laws that have now come to being? There's 4 primary tax laws. Before now, we used to have so many tax laws everywhere: Stamp Duty Act, Value Added Tax Act, Companies Income Tax Act, Personal Income Tax Act. So many of them. For some of us, you see some things like bicycle levy, radio and TV levy. All of those things were under our authorized taxes. And those authorized taxes, sometimes they are applied at different tiers. So you have at the federal government, the state government, even the local government is asking for taxes. Then, to make matters worse as well, there are other service fees that each of these agencies will be charging, which may or may not give you quality service. So it feels very burdensome for businesses in Nigeria. And so what they've tried to do now is to say, how can we consolidate all of these bills into one? Look at the impact on a typical business and look to reducing the effect on them or the impact. So the first stage is putting all the laws together, and with time, there is now a bill at the House that says we need to also look at the powers of each tier of government to say what can they or can they not, raise as a tax instrument. and also curtail those powers. So that's something that probably is going to happen in the next phase based on the authorities or powers that have been granted the Fiscal Policy Committee. Although now there's a promotion now for the chairman to now become the Minister of State of Finance. So we would be on the lookout to see how these changes will manifest. So the first thing was to create the Nigeria Tax Act that brings all of these taxes together. So you will no longer see Personal Income Tax Act separate from Companies Income Tax Act. They are all sitting in the Nigeria Tax Act with different sections for different areas. Then we also have the how it will be administered. All of the agencies have been consolidated and will be administered under this act, the Nigeria Tax Administration Act. Then we have who are the players, who are the key players that you need to know about. The state tax authorities will still be enforced and in fact will be required to enforce the provisions of the law as it relates to individuals and unincorporated entities. But we have a primary agency, which is called the Nigeria Revenue Service, that will now bring together all of these agencies and unify all their actions in a central point. Finally, we have the Joint Revenue Board Establishment Act that also gives more powers to the Joint Revenue Board. The Joint Revenue Board used to be that body that will mitigate among state taxing authorities when there were conflicts, but they didn't really have as much power. So this now gives a lot more powers to them. And then additionally, it also creates the Ombuds Office, which is to advocate for the taxpayers' rights. I spoke about that earlier. So these are the four primary acts. Now, all of these, there are over 400 pages in all of these acts put together. Some of them have opportunities, some of them have challenges. It's important that we become aware of those opportunities that become enablers for our growth, and also become aware of the challenges that could potentially become pressures operationally or financially for our businesses. So hopefully I can touch on some of those key ones that you need to know about. And taking away from here, it's how do I translate that into an action plan for progress? Now, there are main taxes that you should now be concerned about. Remember, I talked about streamlining the taxes so we don't have too many taxes to think about. The key ones are what we have on this screen. One is capital gains tax. The capital gains tax we used to have before 2026 was a rate of 10%, where if you sold an asset that has enduring use, it could be a house, it could be shares in a business, you dispose of those assets, you would pay tax on any gain arising, which is the difference between the proceeds and the cost. You pay taxes before now at 10%. There were also some exemptions that were available. But now, this rule has synchronized the capital gains tax with the corporate tax and the individual tax, because remember that capital gains is paid by companies and also paid by individuals. So depending on what category or who has disposed, your rates would be now different. Before now, it was the same rate for everyone. So now your capital gains tax rate has been unified with your corporate tax rate. So no longer 10%, everything is now taxed at 30%. It's easy to remember, but of course, for companies, it means it's a higher cost for them. For individuals, again, capital gains and income taxes are now the same. They're taxed the same way at the same rates. And the rate for individuals is progressive. So it's progressive from 0% all the way up to 25%, with the first band being 15%. So it's possible that you may dispose of something or you earn income and that you're in a threshold that says that you don't have to pay taxes. So it means that your capital gains tax is 0. But if you're a high net worth individual, then your taxes may be in the range of 25%. After reliefs, it can go lower, which is where the opportunities come. And that's where I'm going to be discussing reliefs. The next point to take note of is a minimum tax. The minimum tax is 15% for large companies. And the threshold is something we would also look at. And the 15% minimum tax was introduced to make sure that we aligned with what was happening internationally, where other jurisdictions have aligned under a body we call the OECD, to say that going forward, because of the way businesses are evolving digitally, it is possible that you will operate and not pay tax in the jurisdiction that you earn income from because you don't have something we call a tax presence. So what these big organizations or big countries, the G20 countries, had done is to say, we need to start making these companies that are evolving so fast, like the Facebooks of this world, Google of this world, to start paying taxes in the countries where they are incorporated, even if they have paid taxes in other jurisdictions. At least where they are headquartered, there should be a 15% minimum tax. And I'm describing this in simple terms. It's a lot complex than that. And so what Nigeria is trying to say is that, oh, if these jurisdictions impose a 15% tax in their headquarters and they pay the taxes there, and we sign up to this agreement as well, it may be that they don't get to pay the taxes in Nigeria. So what they've tried to do is to make sure there's a stopgap and to say, we would also impose this minimum tax of 15% as well, so that we are all in an even playing field. You pay your minimum here, you go to your jurisdiction. If there's more to pay, you pay there. If there's no more to pay, then that's fine. And that's why this 15%. So it's really targeted at larger companies, and we look at the threshold. Foreign companies can now be deemed to be Nigerian companies. Why? Because residence has been defined differently. But it's not just residence for companies, it's also residence for individuals. Once you're a tax resident in Nigeria, you pay tax on your worldwide income, all of your profits everywhere, whether it was earned in Nigeria or earned abroad. So tax residency is important. It's a critical concept to understand as companies and as individuals. Reporting: banks, financial institutions, insurance companies, asset management companies now will be required to report more. And there are thresholds that are stated for the reporting that must happen on a monthly basis. If your transactions are in excess of 25 million as an individual, the banks need to report that to the NRS. If you are a company and you have transactions exceeding 100 million every month, the banks will report it as well to the NRS. Then there's one critical issue, which is the last bucket point here, is the effective date of the law. The tax authorities, NRS in particular, is insisting now that they want to apply the act retrospectively. Remember when I started, I said the effective date was 1st January 2026. But if they apply retrospectively, it means you're not prepared, you're not well informed. And so they can go back to 2025 and apply the new tax rules there, which is not something anybody wants. And it's something you should know about so that you start to advocate as well, depending on where those financial pressures may be coming from because of that retrospective application. Now, when I go on quickly, what are the key changes? The tax rate remains the same. However, there is now expanded room to claim tax deductions because the rule around expenses you can deduct, instead of it now being about it being wholly incurred, exclusively incurred, reasonably incurred, and necessary, it's just two criteria now that will be used to determine whether a cost is deductible. And that's whether it's a wholly and exclusively incurred for the business. There's a lot more focus now on intercompany transactions. There's no deduction, so transactions between parties that are related. If you have a sister company, common ownership, those transactions will be looked at more critically so that certain expenses will not be allowed as deduction because it is with a related party. There are no deductions for transactions where you've not paid VAT or you've not paid import duties. There's no deduction for expenses that have been settled at unofficial exchange rates. So you have to use the rates at the bank. This is forcing us to say we must source for Forex from the banks and not from the parallel markets. There is now a development levy at 4% of assessable profit for companies. And this is really aggregating all the taxes that we knew at the time: police levy, education tax, NITDA, that was the Information Tax Development Levy. All those have been incorporated into something we call a development levy. And this raises the question about changes that you must make to your systems so that you are compliant. Also remember the effective date as well. For small companies, which is also great news, your tax rate is not 30%, your tax rate is 0%. And what is a small company? A small company that has less than or equal to 100 million naira in turnover and less than or equal to 250 million naira in fixed assets. If any of these does not apply to you, then you will not fall in this bracket. So if, for instance, your fixed asset is 260 million and your revenue is 100 million, you are not a small company. So these are the small companies that will enjoy the 0% rate. Not only are they exempt from income tax, they're exempt from the 4% development levy, they are also exempt from value-added tax compliance. There are holidays available, but these holidays are available for companies, and there is a threshold of 500 million to about 200 billion naira investment. It's an investment-linked tax incentive. Once you're able to invest this amount in certain or specific industries, you can get an added incentive, and that incentive is a tax credit that will apply for 5 years, and over those 5 years, what it means is that that credit that you've computed, you use it to offset your taxes. So they are available to priority sectors which are listed in the Act. Examples are like the agri business. Examples are like gas business as well. In terms of VAT, the VAT Act remains, the VAT rate remains the same at 7.5%. But what has changed? What has changed is that now going forward, you can claim impute VAT on almost everything. Before now, you couldn't. So if you are selling goods, say in a supermarket, and you imported those goods and you paid VAT at the port, you offset the VAT that you paid at the port with the VAT that you charge. And it's only the difference that you remit to government. It gets interesting where this VAT rate is 0%. And there are some products that are 0%. Products like basic food items, pharmaceutical items, educational materials, these are 0 rated. This is interesting. Why is it interesting? Because what it means is that your impute VAT that you suffered, you would now claim it as a refund. Why? Because if you suffered impute VAT of, say, 500 million, and you are not required to charge VAT because it's 0%, it means that that 500 million you suffered on the goods you imported, you must get a refund for the 500 million. The refund is supposed to be automatic. The refund should not attract extensive audits, but it remains to be seen how that will be implemented. There is also a timeline within which the authorities must give you that refund, which is 30 days. So it's important that you make a good track of that. And where you're not able to get the cash refund, you can actually take a deduction for it against your other taxes. E-invoicing is important. What is e-invoicing? It means you should digitize the process for issuing your invoices. It's no longer manual. So that means you will be using things like maybe fiscal devices, or you'll be plugging into the FRS system using an API. And then the FRS or NRS now will have real-time information on your transactions. And then on that basis, they can see the VAT that you are charging. They can query certain things. But at the end of the day, it's that you must fiscalize your invoicing. There is a rollout period for large companies. Those are companies above 5 billion naira between last year actually and this year. And the enforcement window will start from next month, April 2026 to June 2026. For medium companies, which are between 1 billion to 5 billion, you have to go live by 1st July 2026, and enforcement window is next year. Emerging companies which are below 1 billion naira, so everybody, it will now affect everyone. Your enforcement window is from 2028, and you must go live by 1st July 2027. When they say enforcement window, that means by that time, penalties will now start to count. And those penalties include 200,000 naira per transaction per invoice that is not fiscalized. And there are more penalties as well. So you must digitize your system to ensure compliance. This also means indirectly that your accounting must be accurate, because you don't want to go and do something that creates an error and then you have a significant penalty. Very quickly, I'll touch on individuals so that I can quickly close, because I know that we're very time bound here. Individuals, like I said earlier, we are now taxed all on residents. So it has to be, where am I resident? And there are actually critical questions to answer for. So for those of us who have maybe relocated to a different jurisdiction, it's possible that you relocate this year, but you are still considered tax resident in Nigeria. So you must always do a proper test to determine whether or not you are tax resident. Once you are determined as tax resident, you must then identify what you pay taxes on. And in terms of the taxes, remember we talked about the capital gains tax, we talked about the Companies Income Tax Act. Your capital gains would now apply on a lot more assets, and your income will apply on a lot more transactions. So things like your virtual assets, cryptos, honorarium, like you go for a presentation, they give you an honorarium, grants, prizes, awards, financial instruments, all of these things where you're making gains on them, you have to pay taxes on them. In terms of determining where you are resident, these are the considerations. Where are you domiciled? Are you domiciled in Nigeria? Do you have a permanent place in Nigeria? You have family ties in Nigeria. So family ties would be your immediate family, yeah? Have you spent more than 183 days in a year in Nigeria? If you're a diplomat and you're serving outside Nigeria, you are also considered a tax resident. So you pay tax on your worldwide income if you're a tax resident. But if you're not tax resident and yet you have earned income from Nigeria, you only pay tax on the income you have earned from Nigeria. And then you would ask, but there's a possibility there's double taxes. Yes. And there are exemptions for that under the treaty, but there are also exemptions in our Nigeria Tax Act to avoid double taxation. So let's look at a very clear example. This is the old band on your left-hand side where you had income from, or tax rates from 7% to 24% at the top rate. The new table is from 0% to 25%, and you also see that the income bands have changed. So the first band is 300,000 here, but here the first band is 800,000, and that 800,000 is taxed at 0. If we look at Emily, if Emily is earning 2.2 million, that 2.2 million takes her into what band? It's in the old, she would have been in the 15% band, okay? In the 21% band, sorry. In the new, she will now be in the 15% band. So you see that it reduces taxes depending on your income type. So they actually were trying to cater to small income earners as well by reducing the tax rate at that level and increasing the income band. And those who earn higher, over 50 million now, are taxed higher, 25%. Before it would have been 24% for some of these people. And now it's 25%. So high income earners are taxed more. Now, there are also changes here, and maybe very quickly, if you have personal chattel, it is exempt from capital gains tax. So if you dispose, say, of your vehicle, your personal vehicle, if it does not exceed 5 million naira, then it's not taxable. If, for instance, you decided that, you want to lay off some staff, and as you are laying them off, you want to pay them a small change for employment loss, it is no longer taxable. So there's a higher threshold from 10 million to 50 million. So if you decide to pay anything below 50 million, you don't tax that employment loss, yeah? If you have losses from digital assets, your cryptos that you're exchanging every day, if you make a loss, make sure you keep a record of those losses, because when you make a gain, you use those losses to offset the gain. If you are in your house, you are living in a house and you decide to dispose of that house because you want to move to a bigger apartment, when you dispose of that your house, the gain is not taxable. However, this is only available once in a lifetime. So once you move to the next bigger apartment and you decide to sell that one for a bigger place, or you are relocating, on that second house, you will have to pay income tax or capital gains tax, as the case may be. Now, in terms of planning, it's important that, I've tried to simplify this and go through it very quickly because of time, but this requires a lot more review, analysis, thinking for you to come to a conclusion of the best outcome for you. There are opportunities. Look at the example of VAT, look at some of the exemptions we've talked about, look at some of the incentives as well. But there are also huge penalties where you don't comply. For individuals, sometimes we're thinking about how do we protect our legacy? How do we preserve our legacy going into the future? What can I do to arrange all my affairs? And so you start to hear things like holding company. You start to hear things like trust structures to preserve your legacy and to ensure that your children are not worse off when you are off the scene. This trust requires deeper thinking now. So you can't just say, I want to set up a trust, and you can't think of the tax implications because the laws have changed in that regard. If you have a company, there's now heightened scrutiny on intra-group transactions. So you have several companies doing business together. You must arrange your affairs properly. And there's something we call transfer pricing to ensure that you don't get into huge penalties. For small and medium enterprises, what this tax reform is telling you is your structure, your governance, your accounting, documentation is critical. Otherwise, some of those benefits, you will not enjoy them. Also, what you can see is that the incentive for being a company that is dealing in 100 million naira turnover is higher than if you were not registered as a company. So if you are just a business enterprise or you are doing a business as an individual, remember that our table, the exemption is just at 800,000, 0%. Whereas if you incorporated, if your turnover gets to 100 million or below 100 million, it's still exempt. So there's an incentive now for being corporate. But you have to think through that before you incorporate, because there are other things also to compare. So cost-benefit analysis is important as you start to formalize structures. For your employees as well, you must start to track expenses. You must separate your business from personal costs. You must also start to adopt or change and amend your payroll systems so that you calculate taxes right. So sometimes, like schools, you might be exempt because you've been set up as an educational institution, but your individuals that are working with you are not exempt from taxes. You have to deduct payee taxes from them. You may also be required to account for VAT depending on the legal structure you use for setting up your school. So all schools are not exempt in that sense. Your legal structure tells us whether you are truly a public educational institution and therefore exempt. So don't just go with the thought or assumption that you're exempt and then you get into penalties. What are your key actions? You must stay informed. Ignorance is costly under this reform. Retain documents. Documentation is central to your tax affairs, and you must keep proper records of your income and expense. I said this before, incorporate to enjoy exemption thresholds. Upgrade your processes as well. And digitize. The e-invoicing penalties are huge. So that rollout plan that I shared earlier is what the NRS had shared. And hopefully we can all start keying into it, know which category you fall into, so that you know when the enforcement might happen. So I'm going to take questions now. I hope I've not used up too much time, but I've tried to rush through this quickly and highlight the key things, and we can discuss. I'm looking at some of these questions online. Let me see. Why are banks still asking for TIN instead of tax ID? They should be asking for tax ID. Having generated tax ID from the portal, do I still need to visit the tax office to register? No, you shouldn't. But just be sure that the records are aligned, because sometimes some of the offices too, again, this is transition period. They might be using TINs in some of their records and not the tax ID. So it's just good to check again to be sure. So there's no misalignment. As a school, for my input VAT, if I apply for a refund, will I still be subjected to an audit before I get my refund? So for the school, if you are required to charge VAT or not charging VAT because it's zero rated, the educational institutions are zero rated, you should be able to get your refund without being subjected to an audit. But again, like I said earlier, this is first few years of implementation, of transitioning. So it's possible that there might be a audit, but it shouldn't be extensive because there's a timeline as well for them to give that refund to you. 30 days. Will a Nigerian company that is a constituent member of a multinational group with a group turnover in excess of 75 million GBP be subject to the ETR? Yes. Once you're a constituent of a multinational group, you will be subject to the ETR. The ETR effective tax rate is your 15% minimum tax. Are we going to have the slides and the recorded audio of this session? I think LOTUS Bank will let us know, but I'm happy to share the slides. Are there any incentives or reliefs within the new tax reform for SMEs? We've spoken about that. There are incentives, so take advantage of those ones we've talked about. So the 100 million threshold exempts you from income tax alongside the 250 million for your assets. How does this apply to charity organizations? Charity organizations are exempt, but of course you need to also ensure that your legal status allows for that type of exemption. So you can't be, for instance, a company limited, a limited liability company, and then you say you're a charity organization. So you must have been set up purpose-wise as a charity organization. And then you would be exempt. But in terms of VAT as well, there might also be exemptions there. So that means if there's an exemption, you cannot claim input VAT, because exempt is different from zero rated. Yeah? Zero rated means you can claim a refund. If the item is exempt, however, you cannot claim a refund if you suffered VAT. Our employees of those organizations need to pay taxes individually. So you would have to account for taxes on the payments you make to your employees. There would also be withholding taxes that you may have to deduct as well from them. Are workers on a project without offer letters also exempted from payee? No, they are not exempt, because remember our small basic introduction to law. A contract is not only one in writing, it can also be in word. So you have a contract, you're making those payments. I only have to check the flow, the payment flow, to ask you for the taxes. So it's not only where there's an offer letter that you account for payee. Does tax for the business name differ from the limited liability company? Absolutely, it differs. If it's just a business name, business enterprise, your income is taxed by the state tax authorities. So wherever you are resident, that's where you'll be paying your taxes. Remember, residence is now defined broadly under the new tax law. So you must find out to be sure that you're not resident in Ogun State and paying taxes to Lagos. So make sure you do that so that you don't have issues where taxes have already been remitted to another state, and then you start getting into battles with the other state at the end of the year. With my tax ID, can I get a breakdown of all my tax records? I think you should be able to, but I don't know what kind of breakdown you are looking for here. That would be interesting to find out. Yeah, I don't really understand the question. But you can also definitely ask information of the taxing authorities. You also need to have your own record. Are premium payments for life investment policies tax deductible? Yes, for yourself and for your spouse, they are still deductible. You can also take deduction for things like your rent relief, especially for employees. So for employees, if you pay rent, when filing your returns, make sure you submit your rent agreement to your employer so that you can get the relief for 500,000 at least, at most. That is the cap that you have, or a percentage of the rent itself, capped at 500,000. You can also get other deductions outside of that, like the premium that you pay for your life. You can get a deduction for pension contributions. So all your mandatory pension contributions, you deduct them before you arrive at your taxable income. So what's some of the planning ideas now is, can I do a lot more voluntary pension contribution? It's now called your personal pension plan, so that you reduce your tax rates, and then you can withdraw your pension contributions much later. The 800K at 0%, is it yearly or monthly? It is yearly. How do we file our taxes? You file them on the platforms. Most of the taxing authorities now are digitalizing their processes. So for companies' income tax, we're using ProMax for filing tax returns. For payee, depending on the state, you file on their platform. So like Lagos State, they have the e-platform as well for filing returns. And I think some of the other states like Ogun also have platforms, Rivers have platforms, Anambra. Otherwise, you'll be filing it manually. Withholding tax, PIT, withholding tax as well, those payments are made online. As a POS agent who makes 25K profits daily, how do I pay tax with this daily profit? This is a good question, because if you are making 25K profit daily, you now have to consolidate on a monthly basis and on an annual basis. What does that come to? So on a monthly basis, it sounds like you might be making about 750,000. Yeah. That's like, I multiply that by 30 days. So 750,000 in a year, you're already above your threshold for the individual limit. So that means you have to calculate that and pay taxes at the progressive rate that we looked at. You know, that table from 0 to 25%, wherever you fall in from an annual basis is where you pay your taxes. But remember to deduct all your expenses. Your expenses include the cost of the POS, the cost of getting to your station, transportation cost, even your rental space as well. If you're using that space for your POS activities, those expenses should be deducted. So I don't know how you arrived at that profit, but think about those expenses in determining what you pay taxes on. For an employee in a company, is tax supposed to be deducted from their general earnings, including the accommodation allowance, travel allowance, or should tax be deducted directly from basic income? It's from all your earnings. Remember, we said once you're a resident, you will now have to pay taxes on all earnings, and then you take advantage of the exemptions that are available. Okay. There's still more questions. For an employee in a company, is tax supposed to be, okay, I've done that already. An intracompany dividend. Are intracompany dividends taxable from a subsidiary to a holding company? So there's withholding tax on those dividends, which is supposed to be the franked, which is franked investment income, and the withholding tax is final. Now, when the holding company is now distributing again to the shareholders, depending on who the shareholder is, they are supposed to be able to offset it so that in the lifetime of that transaction flows, it's only one tax level that has been deducted. So you should offset when you're doing the next transfer again to the next shareholder. But it's possible that it will be difficult to offset where you have different taxing authorities. Because remember, when you withhold tax from dividends that are due to a company, who does the withholding tax go to? It goes to the NRS, the Nigeria Revenue Service, that's responsible for companies. Whereas if you deduct from individual, it goes to the state taxing authority. So offsetting them becomes difficult. Yeah, but if it was going to the same authorities, it's easier. But under this new regime, with the consolidation, I assume that it should be easier for us to do the offsetting. So you should only have one level of taxation between the subsidiary and the holding company. I once went to LRS and they said none of us is earning up to 800,000 naira. We don't have to pay, but the proprietor and head teachers must pay. So they inflated our salary themselves and they asked us to pay. No, this is wrong. So I don't know who you're speaking to in LRS, but it's good to engage properly at the top level. Maybe go to the Alausa office if you're dealing with another office outside of Alausa so that you get the right support, okay? They shouldn't be inflating salaries. If you are below 800,000, you don't pay taxes, you're exempt. I think, okay. Thanks for adding that this educative approach on this. Okay. Thank you for the appreciation. The other one, is there a way we can track the tax that will be used? What the tax will be used for? How will the tax affect us Nigerians? Oh God, in fact, this is a beautiful question. I wish I had the answer. But now that the tax policy committee chairman is now going to be Honorable Minister of Finance, we need to bombard his page more so that they can tell us how they're going to account for the taxes. But the truth is that most of these things lie with our constituents that are representing us at the Senate and also House of Rep. We need to hold them accountable. It also lies with all the agencies that are working for us. So I think Nigerians need to ask a lot more questions at this stage where we're seeing this tax reform. Accountability is critical. How does this tax reform apply to pharmaceutical service providing entities, community pharmacies? So pharmacies, medical services, if you're registered as a company, you are still taxable. But remember that VAT will be probably zero rated for the drugs. So you'd have to be getting any refunds if you suffered VAT on your fixed assets, on anything that you've used to set up that pharmacy. Any profit you make, you look at the thresholds to determine whether you're a small company, treat yourself as exempt. If you're a large company, you pay the taxes at 30%. If you're just a business name, remember that you'll be using those progressive bands from 0 to 25%. Associations, I'm not sure I understand this, but usually or typically associations will be exempt because they are cooperative in nature and they are not made to generate profits or make income in that sense. So they're usually exempt. So you'd find things like clubs, cooperative associations that are just doing a job, maybe contributing, and then you people take your money back. Those kind of organizations are not taxable, okay? Faith-based organizations, yes, they're exempt from tax. They're exempt from tax, so like churches and all, they're exempt, but of course, not all taxes, because they then have to suffer VAT when they buy products or goods and all that. And there are individuals that work for them and not exempt from tax, so the pastors will not be exempt. Please, I need you to shed light on this scenario for a newly registered business. Sorry, I just want to ask if we still have time for me, because I see there's a lot more questions. There are many questions. Many. So do you want to, for me, or do you want me to keep on reading the questions and answering, or how do you want this to go?
Okay, you can just take 2 more questions and then we can wrap it up. Thank you.
Okay. If a company asks her employees to study more and wants to reward them on the completion of the study, will that be a gift or will they pay tax on them? Yes, it's a grant, so they will pay tax on them. Remember those items that we looked at. Why is it taxable? Because she's gotten it as a result of the work, the employment status that she has. Yeah. So it's directly related to her job. It's a job perquisite. But if you were just gifting because the person is your friend and all that, then that's different, okay? So this one is quite linked to the fact that the person studied and you want to reward them on completion of their study, they come back, you are probably using that as a bait for them working more with you, so it's taxable. Let me see if there's anyone here. Okay. Multiple taxation. Let me answer this one on multiple taxation. If I get a project of 100,000 naira and the client only pays a third of the VAT, which is 250 naira, and pays some taxes on my behalf, of which I remember one called withholding tax. The question is, do I need to pay tax again to the FRS, now NRS? Yes, you need to. So the withholding tax is an advance payment of income tax, okay? The advance payment of income tax, the withholding tax will then be used to offset the income tax. So the withholding tax is usually maybe 5% or 10%, but depending on what kind of structure you have, you may be paying tax at 30% because you're a company, or on that progressive rate between 7 to 25%. So you now take that withholding tax and you will use it to offset the income tax that you are due to pay on your profits. Remember, you're not paying on the project amount of 100, you are paying on the profit. So you need to offset all your expenses before you arrive at a profit and determine the tax. Whereas the withholding tax would have been on the full turnover, which is 100,000. The VAT, the client should not only be paying a third of the VAT, they should be paying all of the VAT to you. If you don't get them to pay all of the VAT, guess what? The tax authorities will require that you pay that VAT yourself, and there will be penalty on it. So please ensure that you collect the amount due from these your customers, and you make sure you remit it to the government to avoid penalties. So I'll stop there. Thank you so much for your time. And I'll hand over back to the Lotus team.
Thank you very much, Mrs. Esiri Agbeyi, for doing absolute justice to those questions. And thank you for providing insights as well for this session. The insights have been extremely valuable for our SMEs navigating today's evolving regulatory landscape, and also for individuals as well. Everyone, I believe today's conversation has reinforced how critical it is for businesses to stay informed, structured, and proactive when it comes to regulatory compliance. A few takeaways that stood out for me from this session, including some knowledge that I gained. For instance, incentives for businesses registered as a limited liability company. I learned about that. The need for proper record keeping and documentation, which plays a major role in ensuring smooth tax filing and compliance. The old and new income boundaries. Yes, I also, that was quite insightful as well. And what qualifies one as a tax resident, and business names being taxed by the state tax authority, and so much more. Once again, Lotus Bank is an ethical non-interest bank, and our commitment to SMEs is simple. Support SMEs with not just banking services, but with knowledge, structure, and financing they need to grow sustainably. Without taking much of our time, if you have any business needs as well, aside from today's session, if you need any support from Lotus Bank, or you have inquiries that you'd like to make, please feel free to use the form that has been shared by my colleague in the chat box, and our team will be happy to reach out and support you. Thank you so much, Mrs. Esiri, for the session. I will now hand over to Damilola to give the closing remarks. Hi, Dami, over to you.
Thank you very much, Fumi. Thank you, Mrs. Esiri. This has been such an insightful session, and we had initially communicated that the session was going to be for SMEs, but I started hearing things about taxes for individuals. We basically gave the attendees a 2-for-1 package, and again, we thank Mrs. Esiri for that. Like my colleague Fumi has said, if you have any inquiries, anything at all that you think Lotus Bank can help you with, please fill the form that will be dropped in the Q&A box. My colleague Taiwo Olariwaju will be dropping the link. Also, you can send us an email at support@lotusbank.com, or you can simply send us a message on WhatsApp via 0911 988 880. I'll repeat the number again, 0911 988 80. So we are available 247 to support you. Once again, thank you for spending time with us today. We look forward to continuing this journey of supporting you and growing with your business. Have a great day ahead. And for those asking, the recording will be shared with the attendees. It will also be available on our YouTube page at Lotus Bank. Thank you for your time and have a great day and a great weekend.
Thank you.